the world's poorest people are directly dependent on natural capital for their livelihoods. And we've heard this whole issue around this come up quite significantly around our social context in South Africa as well. And with things such as benefit sharing, access and benefit sharing, my colleagues from DFFE, and the work that they're doing in this regard is really crucial. And then 2.7 trillion is the annual decline in global GDP, which could be caused by ecosystem collapse by 2030. So we're putting some of these financial numbers to this nature-related risk. This is work that comes through from the IPBES in the global assessment. And I think what's really important is, I'm not going to go into detail with this due to time constraints, but I think what this report illustrates is that 70% of land systems have declined since about the 1970s, 50% of freshwater and 40% of oceans and the seas. And this is all science-based stuff. So, we talk about science-based targets. Candace alluded to in a puzzle piece as well, and I'll also allude to it further on in this discussion around what that looks like. We're all trying to look at data, but ultimately there is data that supports this narrative, and I think we need to be cognizant of it. This leads me to a piece of work which I'm really fond of. It comes from resilience science, from the Stockholm Resilience Center. Work that was done by Johan Rockström, we call him Johan Rockstar, in our world, around the planetary boundaries that have been exceeded. But I'm not going to go into detail with all the planetary boundaries. I want to single the very important one out, is that biodiversity and the biosphere integrity. So we have exceeded this planetary boundary beyond the zone of uncertainty. And what I'd like to also illustrate, and I brought my pointer with, I see none of the previous presenters used a pointer, is the interaction between biodiversity and all of the other planetary boundaries. And I think this is quite key. We talk a lot about climate change, and Candace also, and I think some of the previous panel members also alluded to the fact that nature and climate are two sides of the same coin. And I think that's a narrative that we want to bring into this discussion, is you cannot address climate change if you don't address the nature narrative at the same time. And what this actually illustrates is the positive and negative feedback loops and what we call enforcing. So the thicker the line is and the further that specific planetary boundary moves away from biodiversity integrity, the greater our risk of exposure and ultimately manifesting in the economic system becomes. So what's really very interesting is in 2020, the World Economic Forum brought out their very first report called Nature Risk Rising. And out of that report, they used the Encore tool to establish what was the global GDP exposure, which was high or very high materiality to nature-related risk. And they came up with a figure of 44 trillion, and you'll hear that figure bandied around quite a bit. In a very recent report, 2023, PwC established that at 58 trillion. So between 2020 and 2023 years, we've seen a significant increase in that type of exposure. And we're also looking at that there's $10 trillion in annual business value could be generated if we started considering new nature-positive types of opportunities. And I'm speaking to our banking colleagues as well. I think this is something which the finance sector is starting to anticipate, and it can take many different types of forms. It doesn't have to be direct contributions, but through the reallocation of capital flows going forward, we could possibly start seeing some material changes within this. So also coming out of the World Economic Forum 2024 Global Risk Report, what it illustrates is that over the next 2 years, those are the ranks, global risks ranked by severity. But I think what's really key is to look at this over the medium term, and that's a 10-year prediction where biodiversity and climate change, extreme weather events, etc., all of these things which we're currently busy experiencing, unfortunately that should be 2 years in my opinion, but anyway, this is what the global sentiment looks like, are under the top 5 global risks, all green, except for one. I really like this type of illustration because we used to talk about it a while ago. We used to talk about the connectedness of risk, and then we started to talk about the interconnectedness of risk. And those are all one-dimension, two-dimensional aspects around understanding how nature-related risks manifest further in society and economies. We talk now about hyper-connected risks. And if you look at this, and you can just imagine this from a 3D perspective, any kind of nature-related risks would ultimately manifest as some or other kind of social or economic risk. There's a gentleman, Anthony Turton, quite an interesting fellow. He works a lot in the water sector space. He's got a history and a background in strategy and things like that. He was a consultant to NASA at a stage and the CIA, amongst others, I believe. But what he said was that he can illustrate that every single conflict that's taking place on Earth at this current point in time has got its root in some other kind of resource security issue. And if we think about this, and you look at a map like this, this can definitely be one of those things that we need to start thinking if we talk about this the broader global risk picture, and where does nature-related and biodiversity-related risk fit into this. So we look at this as the 4 building blocks of understanding this relationship between the economy and nature. And I'll just point that out. So we look at dependencies, and we look at impacts and the risks and opportunities. And so what would usually happen is business obviously has a direct dependency on nature for its production processes. And if there had to be a break in that or disruption, that's when you start looking at this financial exposure that starts taking place. And I quite like the next slide. There are various iterations of this slide. This comes out of the NGFS, the Network for Greening the Financial System. It was alluded to by my colleague from the Prudential Authority in terms of how are the central banks globally starting to consider this whole issue around biodiversity, and what are the transmission channels that manifest directly into the economy on a micro and a macro level. So I'm not going to go into any detail with regards to that, but clearly we see that there are very definite transmission channels, and some of these, so I'm just going to highlight a couple of aspects. You get physical risk, transition risk, so physical risk being direct impacts on the environment, etc., and resources, and transition risk largely driven by legislative and policy changes over time and requirements for the private sector. We've seen and we've heard about the ISSB and all the initiatives coming out of the IFRS. So those we see as the transition risks, and they obviously manifest in different ways. Physical risks, and some of these kind of risks manifest as stranded assets, liquidity risks, interest rates increases, etc. And often we see these things happen and we think to ourselves, my goodness, what's going on? The price of food is going up. But that comes out of a relationship like this. And then ultimately at the bottom you've got the intervention by central banks and regulators on the twofold side in terms of setting supervisory guidance on the far right to influence the way that capital markets perform, etc. And then the one on the other side is obviously what Shantessa alluded to earlier in terms of looking at and managing what are these systemic risks that can manifest into the finance system. So I think we don't have to debate the fact, but natural capital is the next frontier in financial risk management, particularly in our world. And what I'd like to just briefly touch on is the Encore tool. So Encore is a tool that helps visualize links between the economy and nature. It's an online platform. 2 minutes. I better have to rush this. I'm not going to go into detail here. So you can, I see Amy is... so you can go onto the online platform. I'm going to put an address right at the end which you can log into. It's a knowledge base which is freely available. It's used extensively by the finance sector. Other industries can use it quite a lot, but I mean we've had our, I would say, gained our experience in the finance sector with regards to that. I did allude earlier on to that whole issue around impacts and dependencies. That's the way that the Encore platform has been developed, is to be able a finance institution or a business to understand what their dependencies, particularly on nature, are. And I think that's a core issue that slots back into the TNFD. These are some, it gives you the ability to visualize your dependency and impact flows, and then there's also some spatial data available in that tool. Also take into consideration it's a global tool, so it might not be very useful on a country level, although some of the data is, but I think there would be a lot more further detailed information such as that within the SAM, what SAM is doing. So just quickly to latch on to the previous speaker, to Candice's presentation. So Encore and the TNFD framework are very close partners. Encore has been in development since 2018 and has become actually an instrumental part of the TNFD's LEAP process. And this is where Encore fits in the evaluate the dependencies and impacts, and particularly I think its strength in aligning specific sectors, their sub-industry production processes, the material ecosystem services which support those production processes, and looking at the materiality of it. And that's what we call dependency. And likewise, we also have an impact side which gives you that same type of technical rigor in terms of identifying impacts. So I'd just like to run through a couple of slides around how Encore has been applied. As I said before, the World Economic Forum Nature Risk Rising report of 2020 was used by the World Economic Forum to come to that figure of 44 trillion. And following that, which was really, I think, we were quite chuffed when we saw how the central banks have adopted Encore in looking at their country exposures at various levels, sector banking, private sector banking exposure, and then also looking at some of these GDP metrics. And all of these central banks have used Encore to look at their impacts and dependencies. And just to illustrate that further, this is a study from the Bank of Mexico which links certain financial instruments to specific sector exposure in the middle. So those are economic instruments, sector exposure, and then material ecosystem services which supports those that sector exposure. 2023, we heard before as well from one of the previous speakers that the French Development Agency did a very similar assessment for South Africa, also using Encore to illustrate what the material exposure was economically from some of the primary sectors in the country to material ecosystem services. And this is where I will tag team Martine, and she will give further detail around that assessment. But this assessment was quite interesting because it provided a segue for us and the central bank to take this type of analysis a lot further. And I'm venturing to say that the following three slides, and I'm just going to gloss over them because they're relatively confidential at this point in time. I cannot allude to who the finance institutions are, but the question was posed to us by the SARB is, what would that nature-related risk look like at a domestic bank level as a proof of concept? So what we did is we engaged with some of the largest commercial banks in the country. We selected a portfolio that came out of the previous AFD study, and that was agriculture, obviously one of the low-hanging fruits because we have a lot of data around agriculture. We've been collecting agricultural metrics, and particularly the banks, for the past 20 years in terms of looking at what the vulnerability of the sector is from a climatic perspective, rainfall, etc. So climate and nature integrated. And we asked ourselves a couple of questions, particularly around credit exposure at a domestic bank level in an agri portfolio. And these are some of the preliminary results that have come out. So what we did is we used Encore initially to map the sector's exposure to the amount of material ecosystem services. And then we took it a step further. We disaggregated the sector into the various, we disaggregated the amount of material ecosystem services to the portfolio share of exposure, and the other side. And as you can see, you know, there are the, I would say, the usual all suspects crop out there: water quality, surface water, water flow maintenance, etc., pest control, pollination, and groundwater, and base stabilization, and things like soil quality, as well as ecosystem services that are really material to that specific bank's portfolio. And also take into consideration that it would be various production processes. Then we mapped on that side the material ecosystem services to the sub-industry processes to determine what that level of materiality would look like. We have another graph which I couldn't put on here, which at the top of this indicates the financial exposure of each of those production processes to those material ecosystem services. So that would be 500 million, 2 billion rand, etc. We're in the process of discussing this with the banks as well as with the SARB to see what level of anonymity we need to go through to supply this into the market. And then we took it a step further. We looked at the economic instruments and the financial assets that would be exposed to the two material ecosystem services of soil quality and pollination, and where it would be material and would not be material. So this was giving a very interesting picture in terms of, if you had to look at where those systemic risks in our economic system would lie, this starts giving a picture into that realm. And I do have to stress that this is very nascent work. Like Rion's biodiversity, tourism, satellite accounts, this is exploratory. It obviously is a proof of concept and will be tested as we proceed. And my final slide is just to show what that exposure of those economic instruments looks like to nature-related risks and ecosystem services specifically across the portfolio. Thank you very much. Take questions.
Thank you very much, Thomas, for your presentation and for clearly highlighting the interaction between our economy, the society, and the environment. So we have got a few minutes for questions. So I'm going to call back Thomas and Candice back to the stage, and the floor is open for questions.